What if I told you there is a way to beat 90% of professional investors while doing almost nothing? No stock picking, no charts, no staring at a screen all day. Sounds like a scam. It's not. It's just math, and most people ignore it. Every year, a company called S&P measures how professional fund managers, people who get paid to beat the market, actually perform. The results are brutal, and by the end of this video, you'll know exactly how to land on the winning side of them. Here's the number. Over the last 15 years, almost 90% of active US large cap funds lost to one simple index, the S&P 500, 9 out of 10. And these are not amateurs. They have teams, data, Bloomberg terminals, decades of experience. In 2025 alone, 79% of them fell behind. Stretch it to 20 years and it's about 92%. So here's the uncomfortable question. If the pros can't beat the index, what makes you think clicking buy and sell in your app will? Why does doing more loses? 3 reasons. 1. Fees. A manager charging 1% a year has to beat the market by 1% every single year just to tie. That's a tax on your money, whether they win or lose. 2. Timing. To beat the market by jumping in and out, you have to be right twice, when to sell and when to buy back in. Miss just a handful of the market's best days and your returns fall apart. And those best days love to show up right after the scary ones. 3. Emotions. When markets crash, doing something feels smart, so people sell low. When everything's booming, they pile in and buy high. More action, worse results. So what's the boring thing that beats them? You buy a low-cost index fund, one that just owns the whole market, like an S&P 500 fund. You set up an automatic transfer every month, and then you do nothing. You don't check it daily, you don't tinker, you don't optimize, you let it sit, and you keep adding. That's the whole strategy. Remember that $200 a month video? This is where that money goes. The index does the work. You just do the waiting. Now, to be straight with you, some smart people argue that the 90% number is too harsh. A 2026 study found that if you weight funds by how much money is actually in them, the failure rate drops to around 55%. Fair enough. But sit with what that means. Even with the most generous math possible, picking an active fund is basically a coin flip. So the real question gets simple. Would you bet your retirement on heads when there is a boring option that wins almost every time? Here's the catch nobody warns you about. Doing nothing is the hardest part. When the market drops 20% and the news is screaming, every cell in your body will beg you to sell. The whole skill, the entire game, is keeping your hands off. The market doesn't reward the smartest investor. It rewards the calmest one. So your one job is not to do more. It's to not panic. So, to recap, 90% of the pros lose to the index. Doing more, fees, timing, emotions, is usually what makes you lose. And the winning move is almost nothing. Buy the index, automate it, stay calm. If that made sense, subscribe. I'll see you in the next one.